Hello and welcome to PSN Speak Series, this edition. Now, as you know, under PSN Speaks, we continue to bring on topics which are highly important for special needs children families. And the objective behind this series is that in this half an hour, uh, every week, which we try to bring on a topic which is important from the financial or the legal aspect, and which helps families to understand how they can be best prepared for their special need child future. So let us talk today about a family pension. Now, why I brought this topic is that I have interacted with quite a few families who have, who work with the central government. There is a family pension which will to come to the special need child, but there was a change in rule of eligibility of family pension in February 2021, which actually opens up the topic for debate. So now let's understand what is family pension, what we are talking about. Now, individuals who work with the central government, there is a scheme of family pension, which is specifically a defined benefit scheme. Now, what is a defined benefit scheme? Now, when we talk about pension, there are two kind of benefits. One is defined contribution, and the second is the defined benefit. Under defined contribution, you contribute a specific amount, and whatever you accumulate up till the vesting age, the pension is decided accordingly. So all your pension products which you see from life insurance companies are under defined benefits, defined contribution scheme. And even the NPS, which uh, came in 2004, the NPS is also a defined contribution scheme, because you know what is you are contributing, but end of the day what pension you will receive will depend on how much corpus you have accumulated. So this is defined contribution scheme. Now, contrary to this, and which has been long prevalent uh, in India, is a defined benefit scheme. Now, under a defined benefit scheme, the amount of pension and the government employee will get depends on the specifically the last salary drawn, and a percentage of that uh, uh, is defined as the pension he is going to receive. So under a defined benefit scheme, the pension you are going to get, you can actually work out, you can actually come to know what is the amount of pension you will get when you retire. And so this is a defined benefit scheme. For example, we have seen under defense, under central government employees, they receive a defined benefit pension, and this pension is very well inflation index. That's the beauty of this benefit. Now, since there is a defined benefit pension scheme, uh, so if you are working, you are as an employee, you are receiving this, you are called the subscriber of this pension scheme. Now, there is a provision of family pension, which means that after your death, after your demise, the pension is received by your family, specifically your spouse and your children who are dependent. So when they receive this pension benefit after your lifetime, then it is termed as a family pension. And there is an eligibility defined by the central government, under which this family pension is payable to the members of the family, spouse, children, or dependent parents. Now, what we are talking today is about a family pension, the same family pension benefit which goes to special need child. Now, what is the benefits? Let's understand what the benefit is all about. Now, in a family pension scheme, if you have got a, I'll talk about in the language which the provision is saying. So, if you have disabled dependent, a disabled child, mentally or physically, then the amount, the family pension is payable to him or her after the lifetime of the subscriber. Now, there is an eligibility condition which has been put. Uh, there are two conditions specifically. The first condition is that it has to be, the disability is more than 40%. Now, we all know that 40% is the benchmark disability in India. So, below 40% is not actually considered a disabled, but above 40% is a disabled, and you get a disability certificate for that. So, the first condition is that the disability has to be above 40%. The second eligibility, and that's where the change has been brought, and which is, I would say, is a concern also for a lot of families. What is the eligibility condition is about that your disabled dependent, the child or the sibling, if he has any other source of income, if he has any other source of income which is beyond this family pension, if so, for example, it might be from investment, it might be from any life insurance policies, or it might be from any other asset, it might be a house rent which is coming in. So if there is any other source of income beyond this family pension, and that income is more than 30% of the last salary drawn by the subscriber or the pensioner, then he won't be entitled to the family pension. So what does this mean? Now this means that, suppose I'll just take the example in whole numbers, so make it things very clear. Suppose 1 lakh is the family pension, which is the the last drawn. 30% of is that 30,000. Now you have got a special need child, and there is a house which is on rent, and after you, the house rent, you have only one child. After you, the house rent is going to uh, come to that child benefit, and the rent is 40,000. So effectively this house is beyond the source of family pension. So what the child is going to receive is family pension plus the house rent income. Now the provision as amended in February 2021, it says that whatever income the disabled dependent has, which is beyond the source of family pension, if it is more than 30%, right, more than 30% of the pensionable pension drawn. So for example, if 1 lakh was the pension which was drawn, now 30% of which is 30,000, but the house rent is 40,000. Now in this case, your disabled special need child won't be eligible for the family pension. So that source of income, that income beyond the family pension income, has to be less than 30% of the last salary drawn or the the pension drawn. Now this is quite a I would say a strange amendment which is there. Now there was an eligibility condition before that also, and the eligibility condition was that the minimum pension was considered to be 9,000, and special disabled dependent was deemed to be drawing an income which is less than this minimum 9,000. Now with this provision, what happens in case you have assets and if you leave it for the child? So there is a lot of confusion with this provision. Now where this confusion is coming from? So if you have a one child, and after your lifetime, whatever assets you have will come to the child. Now if those assets draw an income, and if it reaches the threshold of 30% and the income is more than that, then will the child be eligible for the family pension or not? So on the first instance, when we look at the provision, yes, The eligibility says it has to be less than 30%, then only the child or the disabled dependent would be eligible for the family pension. But is there a way out? Is there a way we can see? Now let me draw a conclusion, or sorry, let me draw a comparison of the similar provision do we have in other countries. I'll take an example of US. Now in US, there is a minimum Medicaid benefit which is given to every special need child. Okay, and that is $2,500. Now there is an eligibility condition imposed on that to receive this benefit, uh, the special needs person or the person with disability shouldn't be having any other assets or income. So to receive this benefit, shouldn't be having any income more than this. Now to receive this, uh, so what most of the families are doing, so there is also a similar law. There is one more provision in US, which is special need trust, SNT. Now what does SNT do? Now a special need trust is a specific law which is created for the families who have got a special need child, so they can form the trust, and these trusts can hold the assets for the benefit of the child. Much like in India we have family private trust, similarly you have SNTs, but SNTs are made only for special needs. Now in India we do not have any provision for special needs specifically, so whatever provision we can think about within the gamut of family private trust. Now, so how does families who have got income, assets more than this Medicaid benefit, how uh, they are deriving this benefit even when they have assets and income? So what does they do when, now in the US, if you shift all the asset to SNT, that is special need trust, then those are not considered under the eligibility condition, because they are under a special need trust, which means they will be utilized only for the benefit of special needs. So you have a Medicaid benefit, defined Medicaid benefit, with a condition uh, that the special needs should not have other income or benefits coming in, and if those assets and income are there in SNT, then still the special need child or this person with disability is eligible for the Medicaid benefit. Now, why I'm drawing a comparison, it is looks like the similar situation we are reaching. So you have got a family pension income coming to your disabled dependent special needs child. Now there is a eligibility condition which says that whatever any other income which is beyond the source of family pension should not be more than 30%. So that means quite a few families, and I would say most of the families, can have an income coming in from any specific asset which can breach this threshold. So what will happen if this threshold is beaten? Now we do not have any specific answers for that, because beyond this provision we haven't seen any clarification coming in. But one way we were thinking of, we were planning of, and much of it I draw it from the laws in US are, so what if I put in assets in the family private trust and let them accumulate, and they will be benefits derived from that only for the special need child at specific provisions. Also the question comes in, what if there is no income? What if the assets, it's like a real estate, a property is there, the value is there, it's not deriving any rental income now. What if it derive a rental income tomorrow? So what happens to those assets which are in accumulation phase? Will they still be counted, or whenever they draw an income, then only it will be counted? So those are the questions which is there for this provision. So all these questions are there with respect to the provision of this family pension, which is there, and the amendment has come in last year, so we are still to get more clarification on that. But surely this clarification would be required, that how this income would be treated, how this income would be treated which is beyond the source of family pension. What will happen to all those assets which families have to avail these pension for their special need child. And a lot of families, we interact, plus we also know that a lot of families would have assets and income coming in. So these are the questions, clarifications, we will require. The question need to be answered to make us family who have got a special need child to plan for the child future. So this family pension, one of the thing best do is that it does reduces the pressure from the parents point of view, because they have a certain income which is going to come and which will be derived uh, for the special need child. The benefit of that would be derived by the special need child. Also the pension is going to be inflation index, so it is going to grow with the expenses. So that is one good part. But this amendment provision which has come in, yes, it's a flexibility which has come in by the government. But yes, these are certain questions which will require an answer, which will need a clarification. And especially the provision of a private family trust, because when we look at future planning for families with special need child, a private trust looks to be a probable answer for continuity of child financial affairs till the lifetime. So what happens if I put all the assets in the private family trust? Though the beneficiary is only the special need child, but will I have to put all the assets in accumulation phase, or still the child can derive an income, or the private trust can meet those expenses? So those are the questions which need answers, which need clarification, and in the future I'm hopeful we will get that. But today that's where the family pension provision stands. And for families who are working, who are working with central government, and they are government employees, so this family pension provision is there. Now another question which comes in, and I see with a lot of families, that they haven't updated to the department that they have got a special need child, or they have got a disabled dependent. They haven't updated it. Now the question is, whether if they are not there tomorrow, and they leave uh, leave this provision as it is, as in the situation they are in, not updating their disabled dependent record. So will the special need child or the disabled dependent still be eligible for the family pension? I think this question was asked to the to the department, and the clarification came in that irrespective of the updation by the family member, the disabled dependent or the person with disability will still be eligible for the family pension, provided he has got the disability certificate. So that's one. The second provision, or the second benefit is, for this family pension, now when it reaches to a situation where family pension has to be given to disabled dependent, there was a situation where banks were asking for the guardianship, legal guardianship certificate. Now we do understand there is a legal guardianship certificate required, but without that legal guardianship certificate, the pension was not you know being given to the disabled dependent family. So there was a clarification from the government and a mandate from the department that the bank should not thrust for the legal guardianship certificate for the benefit of the family. So that was a welcome move, where a lot of hassles which disabled have been facing with respect to the banking services. I think that will be eased out. And with this mandate, with this clarification, with this order, the disabled would be able to withdraw money, or then the legal guardian would be able to withdraw money for the disabled dependent expenses. So this is about family pension. It's important to understand these provisions. We have been interacting with a lot of families. We have been explaining these provisions. The changes, keep coming in. There would be a lot of changes which we might expect in the future also. So we'll keep you updated with these changes. But there is a family pension provision under Central Civil Services pension rule. So any central government employee, if will receive a pension, and this is I'm talking about before 2004 employees, they are going to receive a pension if they have got a special need child or a disabled dependent. The same family pension would apply to him or her also. And if you haven't updated this records that you have got a disabled dependent, I think they should, you should update it with the department so that there is no confusion later on. Irrespective of what orders, what mandates are coming in, you should ensure that these records are updated so that tomorrow there is no confusion, there is no hassle, there is no delay in receiving the pension. We know cases where because of absence of legal guardianship, the pension was delayed almost a year or 2 years, and these are going to be eased out now with new government clarification or mandate coming in. So that's all about family pension. And in the next PSN Speak series, we will come again with another important topic. Till then, goodbye and see you in the next Friday in our next PSN Speak series.